Hello and welcome into the KE Report. Chad and Corey here, getting an update on SURG Copper, traded on the TSX.V under the ticker SURG, and on the OTCQX under the ticker SRGXF. And we're joined today with the CEO and director of SURG Copper, Leif Nilsson. And Leif, it's great to get you back on the show. It's been a while. It's been since the summertime when we had you on for an update on your Copper-Moly-Silver Gold Berg Project located in British Columbia. And I wanted to kick things off with kind of a big picture look at the Berg Project. Leif, you did the PEA, the Preliminary Economic Assessment, back in June of 2023. So last summer, and really you've spent time since then dialing in some of the drilling, doing some definition drilling, doing more metallurgical work, doing some engineering work. And I'd love you just to talk about how all this work is coalescing towards a pre-feasibility study slated for sometime next year.
For sure. Thanks for inviting me on again. It's great to be here to provide a bit more context to what we're doing. So appreciate that. So yeah, as you say, in June of 2023, we put out the first ever 43101 compliant preliminary economic assessment for the Berg Project. And as part of that, there was a bit of detail. If folks are curious, they can read the recommendations and so forth in that document that outlines the type of work that was viewed as being recommended to advance the project to pre-feasibility study. So a lot of what we've been working on over the last 12 or so months has been various aspects of that. So we haven't yet, coalesced or committed to proceeding with the PFS or the timeline under which we're going to deliver that. But we've made great progress on a lot of the underlying technical work programs that are needed for that. And just to run through what those types of things are, one of the big ones is a metallurgical tests work program. So, we've done about 8,000 meters of drilling, both in 2023 and 2024, subsequent to the release of that PEA. So lots of, meterage of material that has gone into different programs, but part of that is this PFS level MET program where I think 2 tons of material is being used to form a few different composites that are representative of the type of material that was modeled in the mine plan for the PEA, and we're subjecting those composites to a whole battery of tests to firm up the assumptions that we're making around the flow sheet. So grind size, pH, the different chemicals that you use in the flow sheet, and all the different steps required to ultimately, grind the rock down and then float all of the main economic minerals into a bulk concentrate, which then is reground and is further subjected to another sort of float sequence to separate the molybdenum from the copper con, and the precious metals will stay with the copper con. So we're about halfway through that program. Really like what we're seeing so far. I think that's probably slated for completion in the first couple months of next year. So that'll be a pretty big announcement for us. Some of the drilling that we did this year is really focused on geotech analysis. So holes that are kind of drilled in the outer periphery of the deposit and are designed to really cross the boundary of where the PEA pit is designed, so that we can do a lot of downhole analysis to better understand hydrogeology and rock mechanics and things like that. So there's a whole bunch of tools that you send down those holes to study the mechanics of those rocks, and those help you to underpin and update assumptions that go into mining studies. So things like pit slopes and just the overall kind of sequencing and engineering of the pit. Again, liked what we saw there while we were drilling the holes, while those tests were being done, but those studies ultimately won't be completed until sometime in early 2025. So there's another batch of holes at Berg that we'll be holding back release on until that battery of tests is complete. We did do some infill drilling and put out a couple big press releases over the last few weeks with some of those results. Great results, I think pretty typical of Berg grades. So, hundreds of meters of, sort of 0.23 to 0.3% copper, basically starting from surface. Pretty strong moly grades. The typical moly grade at Berg would be like 0.03%, which is 300 parts per million. but we saw some sub-intervals there with pretty spectacular moly grades pushing 1,000 ppm. So pretty excellent grades there. And then again, pretty typical silver and gold grades for Berg, which is like 4 to 5 grams per ton silver and 0.02 to 0.05 grams per ton gold. So great intervals in the infill drilling there in the western side of the deposit. A lot of that was, traversing through inferred zones in the deposit. So that we'll see hopefully pretty significant conversion of those inferred blocks to measured and indicated at those types of grades that we're talking about, which will allow for the inclusion of those zones into the mine plan for a PFS, which is when we would be declaring maiden reserves. Some other stuff just to be aware of. So there's a lot of these holes as well are going to be material from the holes are going to be used for some geochem type studies for acid rock drainage analysis. So in our PEA, lots of the drilling that's been done at a deposit like this over its history, just for obvious reasons, has been done in the ore zone of the deposit itself. So we don't have a ton of holes drilled into the waste envelope that sits outside of the ore zone. And so we don't have a lot of knowledge about the chemical characteristics of that waste. And so when you're doing a mining study that looks at, how much waste is being stacked in waste piles and what how that reacts to the environment over time, you ultimately need to backfill those assumptions with some hard physical data and laboratory studies on how that material ultimately behaves from a metal leaching and an acid rock drainage perspective. So we're doing some of those studies over this coming winter as well. And then lastly, we kicked off another round of environmental baseline data collection this year. There is quite a bit of history or a lot of data historically in the area for that. So we're adding to an already decent corpus of information, but not all of it is current. And so we want to get some nice time series data that's nice and current before we ultimately would start the permitting process for this project. And that's something that is approaching us pretty quickly. We don't have a set time on something like that, but typically when a project reaches that pre-feasibility study level is when a lot of these other aspects start to coalesce and look toward filing the requisite paperwork and applications with the governmental authorities to get the ball going on ultimately permitting a project like this.
Leif, can you just remind everybody what the overall size of this resource is? And also note, look, that there isn't too much of the inferred category material to move to M&I. And on top of the overall size here, because there are different metals, can you do a job of comparing how this resource and the different metals compare to other assets, either in BC or around the world that our listeners might know about?
Yeah, for sure. So Berg has got a very large resource. I mean, I think the easiest way for people to compare and contrast porphyry copper deposits is probably just by the overall tonnage of rock that is contained in a resource statement, whether you're adding all categories or just looking at M&I on its own. So in the case of Berg, we've got about 1 billion tons in the measured and indicated categories. And then there's an additional little bit more than 500 million tons in the inferred category, 542 million tons to be specific. The I guess important caveat there, or the important added nuance, is it's all one contiguous or continuous zone of mineralization. This isn't adding up a bunch of different pods of mineralization over a huge area. This is really one deposit. So we obviously can't, add all categories together in our disclosure, but as I said, billion tons in the M&I, another 500 million tons in the inferred, which is just kind of the halo that sits around that. So this is a pretty big deposit by BC standards, by Canadian standards as a whole. We've got a table or a chart in our presentation that compares that exact number to basically a bunch of other copper porphyry deposits in Canada. And the takeaway from it is this would basically be the second largest, resource base by that metric in Canada. And then the grade profile at Berg is just focusing in on the M&I category there. It's about 0.23% copper, 0.03% moly, 4.6 grams per ton silver, and 0.02 grams per ton gold. So if you sort of added all those up on a gross basis, That tallies up, depending on your choice of metal prices, to about 0.4% copper equivalent, with, again, slightly more than half of that coming from the copper. So this isn't by any stretch, a super high grade copper deposit in terms of the copper component there, but that's a very decent copper grade by BC standards, and arguably by global copper porphyry standards. And the byproduct credits there, both in terms of moly and silver, are actually excellent. Those moly grades that I mentioned, 300 ppm or 0.03%, depending on what unit you prefer to use. Those are very strong moly credits that would rival pretty much any big copper porphyry mine, up and down the Andes, or in the States or elsewhere in any kind of global copper porphyry belt. So very strong moly byproduct grade, and same with silver. That's a very strong or pretty decent byproduct grade for silver. Golds, for us, this isn't a high gold grade porphyry deposit. I would say the high gold grade ones out there are, you'd expect to see kind of half and half copper gold. So you might see 0.3% copper, and then similarly 0.3 grams per ton gold. Different units, but that's kind of they have a certain symmetry in those kind of those types of numbers. So we're definitely not a high gold grade. Our gold grade is on the low end, but still we get some value from that. And then in terms of the PEA, mineable inventory, which would be a precursor to a reserve, that's kind of our bogey to what we're trying to declare as initial reserves. So out of that billion tons in the M&I category, as I mentioned, we end up with about 978 million tons in the mineable inventory, and 80% of that 978 million tons comes from the inferred resource category. So part of the objective of the drilling that we did last year and we're doing this year is it's really multi-purpose drilling. We're able to, because this is just one large deposit, it's quite easy to design drill holes that meet many objectives at once. But one of those objectives is to have these drill holes traverse through large zones of inferred material that sits within that pit constraint, to ultimately convert that 80%, the 20% that sits within our PEA pit today into the measured and indicated category. And we think we've achieved a lot of that already with the 8,000 meters that's been done in the last 2 years.
Well, Leif, let's dig into a little bit of it. Could you just put out some news last week on some of that infill drilling? Headline hole intersected 320 meters, grading 0.46% copper equivalent, and that's from 10 meters of depth. And you also had 88 meters grading 0.87% copper equivalent at the Berg deposit. So that's some of that infill drilling that you say is multi-purpose. You're getting the ability to maybe jump categories from inferred to indicated. You're also getting some geotechnical information on some of these holes. But I also want to ask you about the copper equivalent part of it. You mentioned to us off mic that a lot of companies in the sector have a lot of variance about how they report copper equivalent. And I'd love you just to weigh in on how you approach the topic.
Absolutely. Yeah. So 2 press releases that we put out in the last 3 weeks are 4 drill holes from the western side of the Berg deposit. And as you say, those are multi-purpose drill holes, but I think will serve a good purpose of converting a bunch of inferred material to measured and indicated. But beyond that, I think some excellent grades on display from some of those holes. So, this is a porphyry deposit, so the big, top to bottom intervals are the most important, because kind of everything that's above cutoff is ultimately being mined here. So those highlights that you mentioned are kind of the full hole length, or the large composite intervals. And we saw excellent grades that are confirmatory at resource level grades or higher in certain cases. So we are very pleased with those, and certainly saw some sub-intervals that demonstrate another good feature of this deposit, which is the surficial enrichment that we see in certain areas. So mineralization at the Berg deposit, we benefit a lot from the fact that it starts basically at surface or within a few meters of surface, and the best grades tend to be toward the top. So from a kind of cash flow sequencing and front end loading things perspective, that's obviously the way you'd prefer to have it. So that certainly is good for us. Yeah, and then the topic you brought up there. So the approach that we take to disclosing our drill results, I think we're proud of it, I guess. Like, we stand by it. It's a very conservative way of reporting intervals. So some people are fans of copper equivalent reporting, others are not. Reasonable people can disagree on this, but I think the purpose of it is really a rubric or a simple single number metric that can help investors that maybe aren't already super focused on this particular project to decide whether they want to read beyond the headline and dig down into further details. And so it takes what would otherwise be like a gobbledygook of numbers and simplifies it into a single number. But the way that we do it is we report the copper on a assayed in situ basis. So the copper component there is what is assayed. But then when we're adding the byproduct credits to that, we are we're calculating them net of the assumed metallurgical recoveries on a deposit average basis that we used in our PEA. So they're not being kind of added on a gross value basis. They're being added, net of recovery losses. And then in terms of the metal price ratios that we use, so, part of calculating an equivalency is you got to convert, the molybdenum to dollar value and then back to copper. And so it has a lot to do with the price ratios we use. And we just, for consistency and I think long-term comparability, we've just sort of set these prices that we used in our PEA to sort of consistently calculate this number. So in our case, the Berg deposit's pretty unique in the relative ratios of its different metals. Again, the copper component is robust. It's perfectly decent, but it's not, we don't run around pointing a flashlight at this isn't like a 0.5% copper plus byproducts. It's sort of mid 0.2 type range with very strong byproducts, but we're adding those byproducts in a very sort of conservative manner. What we see elsewhere in the marketplace is just different approaches being taken where maybe the recovery numbers are not known or companies just choose not to use them or whatever, but there's often an approach taken where the metals are all just being added on a kind of gross value basis where it's all kind of prior to the true impact of metallurgical losses. So it's missing that layer of conservatism. And then same thing with metal prices. I mean, there's no correct metal prices to use, but sometimes people will choose a very low copper price, which maybe, comes across as conservative, but then they'll choose a very high moly price or high gold price. And so it's that ratio that, if you have a very high byproduct metal price versus, in the denominator, the copper price, that's going to inflate the conversion of your sort of byproducts to copper equivalency. So, it's my wish, I suppose, that market participants and investors and so forth would take their own spreadsheet or I don't know, just have a bit more of an additional layer of attention being paid to how these things are calculated, because on a headline basis, they almost certainly are not apples to apples. We get this a lot where we put out drill results that we think are very strong, sometimes spectacular drill results by the standards of this deposit or the standards of BC. And, it's just being undersold in the market, I suppose, because of, how we're approaching the calculation of this number. And then there's other competitors out there who will objectively have drill results that, have a lower metal content, like the true, assayed results are objectively like lower than ours, but the headline number appears to be higher. And unfortunately, there's certain market participants that don't look past the headline. So yeah, I do end up in a bit of conversation with a lot of folks around that point exactly. But we don't really intend to change our approach. We think it's the right way to do it, and it allows for proper, consistent analysis of or interpretation of our results over time. That's kind of what we want investors to be able to benefit from, is see a press release with some drill results and understand it on an apples to apples basis in the context of our current resource statement, our current economic study, et cetera. And that's how our disclosure is tailored.
Well, I appreciate you breaking that down, Leif, just because there are so many companies that kind of put out flashy numbers, but when you dive in under the hood at how they calculate the copper equivalent, it doesn't quite stack up apples to apples. So I like the approach your company is taking and your team is taking. And you've made the point that, you've got a big track record of growth on a per share resource exposure. So every share, the amount of resource it's exposed to, you've continued to grow it. You also mentioned in this call that you'd be one of the second largest copper projects in development in British Columbia and possibly even in Canada, one of the larger projects. I guess just give us a way to stack up how this project is as far as size, scale, and the economics that are known so far compared to other similar type of porphyry copper projects.
Yeah, I would say it's on the large size, kind of medium to large size. There's probably a class of projects out there that is pushing, 10 billion pounds of recoverable copper equivalent, contained within an economic pit, something like that. And we're not quite at that scale. We're around 6. But then there's another class of projects that's, half of our size, right? So I don't want to pick on any specific peers out there, but yeah, there's a bunch. We've got a table in our presentation that kind of details this, but I would say size isn't our concern. This is a big project that, produces a lot of valuable metal that is certainly within the categories of copper and molybdenum are classified as critical minerals or critical metals. They both have, excellent long-term supply and demand fundamentals and are broadly very important for a wide range of different industrial use cases, whether it's modern energy infrastructure or in the case of molybdenum, things like, specialty steel applications that you'd see in aerospace and defense, natural gas pipelines, et cetera. So these are kind of great metals to be exposed to over the long term. And the Berg Project, I think, has a very kind of attractive, size and economic return profile compared to a lot of other stuff out there. And it's also a very simple project, right? It's based in a good location in BC. We're not in the the Golden Triangle is a, awesome place to be exploring. The geology is amazing there, but it's obviously infrastructure constrained. It's pretty remote. And when you're building a big copper project, it's different than a gold mine, right? You need to have access to a lot of infrastructure, roads, power lines, ports, et cetera. And so we're down, a couple hours south of Smithers. This is the industrial heartland of BC. There's lots of other big installations around us. The kind of access and infrastructure side of things is very unspeculative, uncontroversial for what we're doing. So that's a big selling point as well. So yeah, investors should be like, this should be top of mind for folks that if you're thinking about copper projects in Canada, Western Copper is a big one that jumps to mind for people. They're several years ahead of us, and it's a great project. It is in Yukon, so their infrastructure setup is different to us, but people should have SURG really top of mind as well. This is a project of a comparable size, very similar economic returns, much lower kind of hurdle rate in terms of overcoming infrastructure challenges. It's a pretty simple project all told. It's big though. It's like all copper projects. It's going to need big mining companies with deep balance sheets involved in its ultimate development. We brought on a company called African Rainbow Minerals, ARM, as a strategic partner earlier this year. That relationship is going very well. They're a great partner to have. It's early days in the kind of progress of this project. So time will tell what ultimately happens, but we've kind of, proof of concept that this is a project that is of interest to big mining companies that know how to build and operate massive scale projects like this. And they're certainly giving us a lot of support as we advance this thing towards pre-feasibility.
Yeah, it was nice to see the transaction with African Rainbow Minerals coming in as a strategic. And you also have Centerra Gold in there as a strategic, I think with around 12%. So you got a couple of big boy miners in there. It'd be nice to even have another one in there, Leaf. So I'm sure that this project, as it continues to grow and de-risk, will continue to attract the attention of the larger mining companies. One more thing we'll just kind of squeeze in here is you do have a second project, and we don't spend a lot of time on it, but it is another value driver in the company that I don't think you're getting any value for right now. But I would love you to kind of break down for us the Ootsa project and just how it's another kick at the can with more minerals and more copper focus for the company.
Absolutely. We don't highlight it simply for lack of time and to not distract people from the core message, what is our Berg project. But we see a ton of value at Ootsa. If you look at our disclosure around it, it really just focuses on the resource itself, and there's good reason for that. It's a big resource. It's not quite as large as Berg. So, talking about the same numbers as I did for Berg, this one is about half the size. It's about a little bit less than 500 million tons in the measured and indicated categories, with an additional 140 million tons or so in the inferred categories. This one is spread out across a few different zones, so it's not one contiguous zone. It's a few different deposits. You could refer to it as a cluster. The grade mix is a fair bit different. So copper grades are comparable to a little bit lower than Berg, probably around the kind of 0.18% level in the total resource. That wouldn't really be our sort of mineable inventory if we were to run a kind of PEA on it today. You probably see a grade shell in the sort of 0.2% range. Moly grades are pretty similar, 0.02%. Gold grades are much higher, though, about 10 times the size of what you'd see at Berg, so kind of in that 0.12 gram per ton range, and then slightly lower silver grades at 2.1 grams per ton. Pretty advanced deposit. A lot of drilling here, pretty high category resources. A lot of metallurgy has been done here. The way for investors to think about the economic option value here is that this cluster of deposits is very close to the Huckleberry mine and mill that is currently on care and maintenance, that is owned by Imperial Metals. So Imperial has, lots of other stuff going on in their business with their 30% interest in the Red Chris mine that is undergoing a huge expansion at the moment. And then they also operate the Mount Poly mine, also in BC. Huckleberry used to be their third operating asset, but they've had it on care and maintenance for 9 years or so now. And they do talk about restarting it one day in the future, but I think it's really a story of when they're going to have capacity to do so, given what else is going on in their business. And ultimately, when Huckleberry does get restarted, it isn't a super long reserve life asset. There is several years there, but it's up for debate what the ultimate, remaining reserve life likely is there. And we contend that Ootsa, not necessarily the exact resource numbers that I just outlined, but perhaps a smaller, much higher grade subset that sits within that resource would likely represent the most logical, most attractive mill feed material that could be used to extend the useful life of that infrastructure at Huckleberry. So we think there's a very coherent, logical business case to be made that this idled mine that is kind of that our land package surrounds at Huckleberry, that the Ootsa deposits or the Ootsa project could ultimately be plugged into that one day to realize significant synergy values. So there's a lot of work that's gone on there in the background. It doesn't feature prominently in our disclosure, but our message to investors would be, look, you can probably come up with a really comfortable value investment case for SURG on the basis of what we have at Berg. Just focus on the PEA at Berg. How does that compare to lots of other, copper investment opportunities out there? I strongly believe you'll conclude that SURG looks very cheap on the basis of what we own at Berg today. And so everything we've got at Ootsa, everything I described there in terms of potential value that could be realized with some sort of combination with Huckleberry, that's just sort of free upside, free option value that we don't ask you to sort of pay for in our current equity value today.
All right, I think that's a good way of looking at it. It's just kind of free upside optionality on rising metals prices and the potential that the Huckleberry mine could go back into production again and use some of that as its mill feed, as you stated. So just thought we'd throw it in there as another value driver for the company. But obviously, the main focus at the flagship Berg project. I really appreciate, Leif, you breaking down how the resources are pulling together into a expanded PFS. Hopefully for next year, we'll see how the timelines go. All the metallurgical work you're doing, all the other de-risking work the team is doing, the geotechnical drilling, the infill drilling, it's all tying together into what it should be one of Canada's biggest copper development projects in the works, with a nice moly and silver kicker and a little bit of gold. If people want to get more information on the company, definitely click on the link below this interview. It takes you over to the company news section where you can follow along with the news as it's released to the market, and obviously take a deep dive into the corporate presentation. And Leif, keep us posted as you hit other milestones or other key news breaks. We'll get you back on for an update. And as always, looking forward to our next conversation.
Likewise, great conversation. Thanks for having me on, Chad. I really appreciate it.